Our company task group is Australia's largest provider of lottery, wagering, and gaming. Firstly, I'm going to explain the financial and social performance of our company. As it shows, the revenue and the gross profit generated this year increased by about 4% compared to the last year. However, the net profit is negative 7.2%, which was mainly due to discontinued operation. And now I'm going to explain in four aspects about financial performance, which are liquidity, profitability, solvency, and efficiency. Firstly, liquidity position. The quick ratio of 0.59 stressed that we only have 59 cents liquid assets available to cover each $1 of current liability. However, we experienced an improvement. Second, profitability. The ratio examines the earnings generated from assets, and the 4% is not bad in industry. Third, solvency. Our company is debt financing, which means we mainly rely on debt to operate. However, our debt has decreased this financial year. Lastly, efficiency. The inventory turnover rate is low, suggesting that we are overstocking and low efficiency. Next, social performance. First, in terms of sustainability. Compared to the last year, in financial year 2016, we developed 3 pillars of sustainability that better get us to take our social responsibility. They are 1. Putting stakeholders first. 2. Being environmentally responsible. 3. Maintain an effective governance structure. Second, in regards of tax contribution, in this financial year, we contributed a total of 1.21 billion to the communicated via fishing and lottery taxes to state and territory governments. This amount increased by 100 million compared to the financial year 2015. Third, about our people, we invested 1.6 million in the training and development of our team in financial year 2016, compared with 1.2 million in the last financial year. Improvements also made in terms of employee safety program. Details are provided. Plus, environment. The number of motor vehicles decreased. However, the carbon dioxide emission increases financial years. So it should be the aspect that we should make an effort to improve in future.
The difference of the two figures is caused by the following extraordinary or non-recurring events. Number 1. Changes in the fair value of available for sale financial assets. Once available for sale assets are revalued, they are recognized in other comprehensive income. Number 2. Changes in the value of net investment hedges. Amounts are reclassified into the income statement if the hedge is ineffective. Number 3. Changes in the value of cross-currency. A foreign exchange between two institutions from one currency to another currency. Number 4. Changes in the value of interest rate swaps. Two parties agree to exchange interest rate cash flow based on from a fixed rate to a floating rate or vice versa. Number 5. Changes in the value of forward foreign contracts when an investor has an obligation to either make or take a foreign currency payment at some point in the future. Number 6. Exchange difference on translation of foreign operations. Translating a given number of units of one currency into another currency at a different exchange rate will lead to a difference. A new accounting standards will be released in 2019, which is AASB 16. Under the new standards, all leases will be capitalized on the balance sheet, with 2 exceptions. There will be number 1, no more operating leases. Number 2, all leases will be capitalized on the balance sheet by recognizing a right-of-use asset and lease liability. Number 3, no rental expense. All leases are compromising depreciation on the right-of-use assets and interest on the lease liability. Number 4, when initially measuring the right-of-use assets and lease liability, non-cancelable lease payments, as well as payments for option period which the entity is reasonably certain to exercise, must be included in the present value calculation. Here are the lease agreements our company has entered. According to the ASB 16, commitment within 1 year should not be capitalized. The commitment more than 1 year should be recorded by credit right-of-use assets and debt lease liability at the end of financial year. Journal entries are provided. Next is impact on assets, liability, and profit. The right-of-use assets will be recognized at the balance sheet as an asset, therefore the asset amount will increase. Liabilities in terms of lease is not recorded before, so it should also increase because there will be a lease liability occurred. Right-of-use asset is to be depreciated, so there will be a depreciation expense and an interest expense occurred instead of rental property expense.
Hi everyone, now I will present Part 4 and Part 5. For Part 4, the company covers impairment testing. These key statements apply for the impairment testing for all of the groups. Indefinite life, intangible assets. The impairment calculations are on a value in use base. The cash generating units. Goodwill is allocated to the group's cash generating units for the purpose of impairment. The allocation is made to these cash generating units or groups of cash generating units that are expected to benefit from the business combination in which the goodwill arose. The reason for their choice in your company. Goodwill and intangible assets that have an indefinite useful are not subject to repayment and are tested 6 monthly for impairment or more frequently if events change in environment indicate that they may be impaired. For Part 5, the property, plant and equipment according to the cost in that report. Property, plant and equipment is stayed at a historical cost less depreciation. Cost may also include transfer from equity of any gains or loss on qualifying cash flow of foreign currency purchase of property, plant and equipment. The asset residual value and useful life are reviewed and adjusted, if appropriate, at the end of each reporting period. Revaluation model is to be preferred to provide a true and fair representation of the company assets. In this case, the company chose revaluation model. The revaluation model should include be carried out regularly, so that the carrying amount of an asset does not differ materially from its fair value. And also it allows both downward and upward adjustment to value of an asset. And finally, thank you for listening our group video.